take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment to which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So we got that hit twice, not once but twice, off of that daily support structure at 28,690, 28,500 to be exact, on this drop to the downside, the ABC wave of the mean reversion rejection off the diagonal pitch fan here on the Coinbase chart. Let's go into the liquidity and see where the potential of liquidations lie. As we saw the rejection up here at the 30,000 region off the point of control, are we heading down to the next range bound region of this point of control down here at 28k even? Let's find out. Boom, 1 minute time frame. So as we saw that liquidation of that I'm jumping the gun here. So what is high block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait or get burnt to a crisp already. So on the 1 minute time frame, we saw previously on the monthly time frame that there was 12 billion to go down there and grab, and they sure did go grab it. Let's go ahead and juxtapose that alongside the minute chart. My cat is being persistently needy at the moment. You could probably hear her purring into the mic. the Shure mics are pretty nice mics to pick up. So we had that 14 billion at 28.7 that we went and reclaimed after making it red hot for a little bit, and yeah. So we came down for this $14 billion at 28.7 as we predicted, and it looks like we went down for 5 billion more off the 28.6 region just a moment ago. That could have been a nice little scalperoo if you hopped in on that. Let's go ahead and look at what's going on the minute time frame. So you had a $296 million short pool opened up on that initial drop today. I did scalp that for a little bit without looking at the liquidity and closed it at the exact peak. But look at that little 100x pool that got V-shaped.
Fatality.
This is why 100xers need to consider paying themselves quickly, especially if you're opening up into red candles like that. They V-shaped right back in your face. And it looks like they are going back down to take out this $149 million 100x pool down here that took this V-shaped and hoped for the snipe of the bottom. And they came and got them too.
Fatality.
And we have another 136 million pinged in at 28.5 even. Let's go ahead and take a look. Right now there is another $264 million in short liquidity and pools pinged in here, stacked as well. So they're starting to build a narrative structured for a potential reversal out of here with the amount of shorts that they're pinging in as opposed to the longs. So you aren't without pinging in the longs at all. 149 million here and 136 million here, but the imbalance is starting to form to the upside. So you're starting to see a negative $5.2 billion imbalance in shorts. Are we going to continue lower? Let's go ahead and expand our vision to the higher time frame. So let's go back to the 7-day before we jump the gun to the monthly. Booyah, shout out to everyone here. All right, Kat, we get it. She likes biting cables, so she gets a little bit frisky and bites mic cable. Right, Kat? You want to say hi? What's up? Come here. There you go. This is my kitty cat. You're a kitty cat. Yes. See, there you go. That's you. See? All right. Okay, so on the 7-day time frame, looks like we did make a jump to that 28k region on the imbalance on the monthly. This is why you juxtapose the time frames. The 7-day was pretty even Steven, as we said. It could have gone either way, so we had to expand our vision to the monthly to see. And the next pool on the 7-day is down below at the 28.2 and below region. Could we go lower? It's entirely possible, so let's find out by expanding our vision to the monthly. I like this part in the mix. Starts to get into the liquidity. It's like the liquidity track. All right, so we came back into the 14 billion at 28.7, wicked off the 4.7 billion at 28.6, and are coming possibly up to the 29.1 to get that $2 billion. Let's see if that coincides with this little bit of happiness up here at 50x. 29.11, yeah. Like we could come back easily to that stacked liquidity region. It's about 50% of that vector candle. Let's just mark that off really quick on the Coinbase, not the Coinbase, the Binance chart. So check it out. This is the projection from yesterday. Pretty rad, huh? So you got that rejection off the 0.65, down beneath you got the trap door opened at the 706. As we talk about that trap door, something to watch out for, that trap door of the 706 of the trend base fib level to the downside. So we were seeing rejection off of the 706, and boom, we dropped down into the 1 to 1382 region. We had previously come a little bit, about a 10/5 of the way through. So now we went 2/3 the way through. We have yet to complete to the 1382 level of 28,459, but it's entirely possible we get there. So we can remove this. It's pretty accurate as of this moment. So we'll just leave it there for the time being. So let's leave that there, and yeah, let's go ahead and see what's going on. I'm gonna go into the, just to mark off that liquidity really quick, at 29,100, was it? 29,109. Gotta be precise. 29,109. 29,109. So there is a pool there, and that kind of coincides with this fair value gap wick zone too. So they could be coming back into this vector to get this guy. If they're going to continue lower, they're definitely going to stop out that 50x pool before anything else, because that is a mighty large amount of liquidity there on that time frame. As they enter an order block, perhaps they might be entering off of some 100x pools of the bullish order block kind, and then you could do a retrace on here. If you're looking for a scalp to that upside path, we need to go put some fibs on here. You could just be locally looking for, I'm going to just make this smaller. Boop. And you could be looking for a little scalp inside that region. All right, so let's go ahead and zoom out of that real quick and go to on the monthly time frame. So the monthly time frame does have double digits down at 28.2, insinuating you could go lower. On the upwards path, you don't have that nearly locally just yet. So let's expand our vision to the 3-month. Let's make sure that the imbalance is still proper. Kind of even Steven, we maybe have removed the imbalance on the monthly, so we have to look to the higher time frame, because that even Steven insinuation means that there's an imbalance elsewhere to reconcile. So on the 3-month time frame, you are seeing this imbalance of the Bart Simpson idea down to 24.6 and below. The pools are looking juicy above 32k, but not just seeing it just yet. You have more liquidity you could go lower to reclaim on the 3-month. 6-month. On the 6-month time frame, you do got sub 25k, $142 billion at 24.6, 180 billion at 24.3, and the pool's starting to percolate up above 32k, 128, 72 billion at 32.4, 100 billion, 100 billion, 100 billion, 100 billion, all the way up to 33.6. All right, so eventually they're going to find an order block of their liking and make their way up into this region in similar fashion as they did sub 24k. It's just what it does. It goes down to go up, and it goes up to go down. So let's go to the 2-year time frame and see where that is. Everyone's going to start getting bearish and saying that the sub 25k could be inbound, and it very well could be, but the bullish narrative would be kaput at that time. They could go take out on the 2-year time frame is what I'm looking at here. So the last and final time frame available to us, you have $175 billion at 32.4, 181 billion at 32.8, 197 billion 33.2, starts to taper by a little at 33.6 at 124 billion, 111 billion 34 even, and you're starting to get paths of 100 billion all the way up to 36.4. And down below you have 241 billion 24.4, 117 billion 24 even, 168 billion 23.6. So you're starting to get these thick paths to the downside, but also these thick paths to the upside that are not being displayed on the lower time frame. So this idea of coming down into an order block of some kind and then possibly bouncing and letting the bears think that we would go down here. These could be market maker positions. This could be BlackRock for all we know. They have a large amount of money. They're protected positions. If we go back to a level here, all of these positions, there was 154 billion on June 15th when they decided to shift out of here on that Thursday. On my time, they just left all of this stuff on the table. So that $154 billion down at 24.4, just, it could be a protected position, who knows? And they could just continue to send it higher as they squeeze the shorts. It's just the trend has been in this nice manner, and you are seeing the liquidity bands on the 2 years starting to get thick up in that 33.2 region. So it just seems that there could be a bounce there before they decide to peel out. Like, and it could be a trap too. Like, they could go up to here, spawn some, get everyone bullish, and then just ride it all the way down to here, and that could be your Bart Simpson at that time. So let's go back to the monthly time frame. It's too far in advance, so we're just speculating at this point, spitballing, if you will. Take it in stride, and then as we go, we just happen to be accurate a lot of the time. And we don't put out bull flags in either direction. So let's see, the 28.4 region, yeah, there's still that liquidity down at 28.1 on the monthly time frame that we could be looking at. Let's go back into the charts. So I'm going to remove this colored background. We reclaim most of it anyway. And I'm going to turn on our oscillators. Boom. Boom, boom. And what is this bit of happiness? Well, link is in the description for more. momentummaster.info. You could toggle everything you want to see, or you can see each component as it starts to appear, and we go over it in prominence. Okay, so that's enough. So as we go to the 12-hour time frame, which closes in about 7 hours, let's make our descent through everything cleanly through the 3-day. What is closing soon? Not the 5-day. 3-day is closing in 6 hours. So just to note, we did tell you about 9 days ago about this cross down event, right? You remember that, right? Friday of last week, actually. We were saying the 3 days looking to close, and the last time that happened, we had this huge 60-day retrace. So this is why we were not looking for longs. We were kind of looking for continuations of this bearish trend-based fib level and seeing that rejection off the 0.65. It took a while to play out, but the boring price action did play through to that ABC to the downside. And yeah, we could be continuing even lower down into the Hail Mary at the 1618 region at 28.120. That would put us down in the cloud region on the 3-day. The 3-day cloud is starting to taper and chill out here for a moment, looking for a kiss to the cloud. As we do in similar fashion, we retraced all the way down to the cloud and bounced off it last time. So are we going to get that bullish order block off the cloud? That could be a case to make on the 3-day, as you see this suppression of the baselines. What are the baselines? Well, funny you should ask out there. Your first signs of reversal, and the baselines are one of the few leading moving average formulas you will find on the market. And that is why they had you at hello before you even knew it. Let's look at the oscillators. The stochastic RSI has reset. Money flow coming beneath the RSI, expressing a fatigue on starting to form in terms of a potential bounce starting to form. In this similar fashion, we saw the money flow flowing beneath the RSI here, and it got that disparity, and that disparity insinuated a wind up and a pitch to the upside. And similarly, when you get that money flow above the RSI, it starts to insinuate a dump to the downside. So this is why we look at these disparities between the RSI and the money flow, and you're getting that cross down event on the alarm as well, which is why this B wave continues into the C as we see before us. Now let's go into the daily time frame. The daily time frame looking to get that suppression as we talked about on the higher time frames, and the 6-hour fatigue, and this money flow coming above the RSI here, suggesting we come back down on the daily. If the daily candle closes beneath the support structure listed here in yellow at 28,690, if we go beneath this level and close the daily candle beneath this level, you can expect that we're going to retrace more down into these regions. Now, the daily time frame super trend is about 2.1% away, and we've been holding that since our ascent out on Thursday the 20th. So are we going to hold this? This is also the adaptive moving average on the daily time frame slash support structure from over this region. This rejection wick, previous resistance, could become previous current support on the daily time frame. So are we coming lower? Daily time frame right now, the KD line suggests that we do come lower. The RSI is above, the money flow is above the RSI, suggesting we could come a little bit lower for that double bottom. We were talking about double bottoms on the Williams. It's been a while since we've seen that on the daily time frame in this green region like this, so it's interesting to note. It's been a very slow fade on the price action, which is interesting that you had previous money flow divergence, hidden bearish on the money flow on the 22, and then we started to get that, we were talking about this disparity on the 22, seeing if that would hold true, and it did. So we'll note that in the future, that when the money flow is above the RSI on the 22, that's a very clear signal of that fatigue, and so you could be coming lower on the 22-hour time frame. Let's go ahead and take a look below that to the 12-hour. 12-hour looking to try to get a bounce from those wicks it's creating as it goes lower. We already expressed what that bounce is insinuating they're going to grab in terms of money. This is why you look at liquidity plus momentum. Just pattern trading and momentum is not enough. You need to have some sort of level 2 data set that you're looking at in terms of the liquidity, open order interest, all that stuff. There's multiple things people look at, tools, if you will, exo charts, as some people, open order, CVD divergence for entry models for other people. It's all up to you, but finding that special sauce mixed in with momentum will take you to the promised land. So looking at this money flow coming out above the RSI with this 12-hour hardcore rejection with the KD lines, you could just get a hard reset of the 12-hour, similar to this, where we had this hard reset here. Cloud is starting to taper in a slight manner here on the 12-hour time frame with this angle here, but the thickness is not insinuating it's over just yet. And if we go to the 6-hour, this was our key time frame we were saying to watch out for. The 6-hour time frame was previously bumping up against this cloud, and you saw this money flow above the RSI in a fair manner, and we were saying watch out for that disparity. You had this previous hidden bearish divergence on the money flow that started to express itself, boom, to the downside. And now you're getting a blue vector candle, which is a stopping volume candle until this turns green. It's not necessarily a repricing to the upside model just yet. Williams has yet to get into a sweet spot here for the 6-hour time frame. You got the 4-hour time frame also with the money flow above the RSI, suggesting we still continue lower. You're getting this fatigue. It's not ever going beneath it. Even back here you had the fatigue building on the 4-hour time frame in similar fashion to that 6. You see that disparity above the white RSI here? This is like a struggle. It barely got above 30k and sold off into it and went into that 236 model for the bearish entry, and boom, you saw that drop to the downside. So this is the same thing when you get these disparities and you get overbought and whatnot. We could come back all the way to the cloud. The cloud is now expressing itself with that drop to the downside and coming back into the 4-hour, trying to express itself here. If we go into the hourly time frame, getting overbought, but the rising sun event could push this continuing to the upside to the pool and slash cloud on the hourly time frame. The cloud is still mighty thick, and what do you know, it coincides with our liquidity of that 50x guy over here. this one. 264 million at 29,118. Wait, I thought it was 107. What's going on? Did I pick the wrong one by mistake? Let's take a look. 118. Sorry, it is 118. 118. There we go. So this could go up to here and see what this does on this cloud. We always talk about the narrative of it needing to close with conviction above the cloud. So if this went above the cloud, rejected up here, came back to this cloud, and then you'd be slated to continue off of the cloud, thinning. So if this is a true bullish move, you'd see something like this with the cloud, and the cloud would begin to thin as you sell off into it, and you'd get a kiss to continue off of that idea. So it'd be something like this, and then we could change this to a equilibrium bounce, perhaps. Like you could even come down to that region or something. You know, just preemptively projecting, you know what I mean? But this is what you look for if it's bullish. You know, if it's continued to be bearish, what you'd see is most likely a shoot up into this region and a rejection off of that, and then just continue down into that 29 and lower. So the thick cloud insinuates a rejection unless you see these vectors kind of push through it. We had what is a vector? Well, this is this green repainted candle here. This is 200% of the previous 10 candles combined inside that 1 hour candle right there. So all these 10 hours of sideways action, you had that here. You had a large amount of volume inside that, and then you had 200% of the previous 10 combined, even more than that in here. So this was a significant interest generated, repricing it up to go grab these shorts that entered into that support. I just don't get it. Why don't they enter their shorts here, like off the fatigue of Fibonacci's and things like that? Like, why would you put 296 million on the table as it's dropping? It's like the worst idea in the world. Not financial advice, but geez, man, like look at this. And I don't care if you're a bull or a bear, it's just stupid. Like, you're gonna open up 264 million in shorts here at 28,662. Are you okay? Like, that's what I want to ask that person. Are you seeing things all right? Because it immediately just goes and takes their money. And they're like, what am I doing wrong? It's like, well, how about breakout trading is not the way? That's for starters. And so they could be coming into the 100x a little bit lower first, but eventually coming to the 29,118 before they continue lower. Either way, they're most likely going to take out the 50x first. So we're going to see a potential bounce up to that structure anyway. On the hourly time frame, getting fatigued, so you could flag out here and try to go consolidation mode to reset some of the oscillators and induce other people into the charts, and that's what it's about. The flags are bull flags, and all those patterns are just tertiary reactions of inducement. And what is inducement? Well, it's just an enticement, like a siren to the sailors sailing by in their boats. It's song they're singing to try to bring liquidity into the charts so they can crash their ship to the rocks below. The sirens of the sea. And that's all the patterns are, and they don't know what they are until they induce enough liquidity to express what they are, which is why you need to look at the liquidity too. Pattern trading is no more than speculation, and there is no if it's 68% of the time on both sides of the trade, how does that factor? You don't have 128%, you know, you don't have over 100%, so you can't have it both ways. It's one or the other. So if you're wrong on both sides, then the pattern is not correct. So as it seems on the 15-minute, we are getting a somewhat of a bounce off of the cloud here. Came back, you pierced the cloud. So what we said we wanted to see on the hourly occurred here on the 15. This is the rise, retrace, continuation idea coming off of the cloud. You had resistance off the cloud, pierce above it with conviction. Now you're coming back to retest the cloud and you're out of there. So let's remove this 864 region. That was a previous wick that we reclaimed, so we reclaimed that wick, and we're going to draw the fibs here just to be precise. Where are we in terms of basic fib levels? So we bounced off the 382 level of this local range. We could entirely come down to the equilibrium. If we are bullish, it could bounce at equilibrium here at the 28.821. Is there anything down at 28.821 to warrant going down there? 821 would take you to the bottom of this little bit of 100x, guys. There is that 67 million down there that they could go back to take first, that they're paying 100 times to, so they could make a little mini M, then bounce out of there. So today in the market cycle is a Wednesday, so eventually you'd be looking for some sort of continuation of the move for tonight, which was to the downside for Tuesday. So you had this Tuesday move to the downside, and you could see Wednesday continue that play. Where do we already worked out the levels at 29.1, or sorry, 28.1 rather, down to this fib level at the 1618 could be your level of interest. We're going to possibly retest this super trend of the bearish kind, which is holding true since Monday on the hourly time frame in this cloud. So what does it do as a reaction to this hourly cloud is the question. Not just an entry. There is not really an entry for a long, I would say. I would be looking for that potential deeper retrace if there is a real long. This wick concerns me. It does not seem genuine. It's just a V-shape. It's still continuing into the V-shaped idea of reclaiming some of these shorts. So if you're not risk averse like myself and you try to just enter into things, you could be looking for that pull up to that 29.118 region, but that price action is not enough to bring me to risk. And I still think longs are paying in terms of funding right now. Shorts maybe have not yet been charged. So until shorts get charged, I'm not looking for a long just yet. Yeah. So it's a shame we were asleep. We missed that London close. Special sauce out of here. Let's go ahead and take a look at the dollar and see what the dollar's doing in total and all that fun stuff. And then we'll come back and wrap it up in a nutshell. So the dollar getting a burst through the 6.5 of the bearish trend base fib level. We had that previous ABC wave play out, so this is finished, and we're starting to make our ascent out of this resistance level for the time being, getting overbought on multiple oscillators while doing so. So you're pushing hard out of this zone. Is this going to reclaim above and beyond its region here? Is it going to reclaim the range and get out of this ABC that it had to the downside? You have another ABC that is going like this, and then when it does that, it'll have a correction back down. You're reaching on the 12-hour time frame up into the fair value gap slash range before this drop down here. You're getting the volume vector candles starting to repaint here, although you don't see vectors inside the formula because the volume is not displayed on the 12-hour time frame. Starting to see this oscillator get pinned while the Williams comes up in a fashion here. The average of the Williams still suggests it could taper on some into the daily close. If we look at the 6 hour, also pinned, 4 hour also pinned, daily time frame also pinned. So you're extremely overbought on the dollar, and it's a lot of these take profit zones on these assets. Like you're seeing a bleed out on Tesla right now, 2% down for the day. So are they taking profits and inserting them into the dollar? Powell did say once again that we will start liquidating our portfolios, their security portfolios, to reinvest into the dollar. So while they did not have a change in the policy, they were talking about the Fed's investments. They're going to basically trim profits, and that's what they're doing here and there. And so you're seeing this interesting nuke play out on Tesla, and they're starting to take profits on that, which is affecting the NQ slightly. Let's go see what the NQ is up to. And we're going to switch gears here. We're going to throw on a scalper strategy for the 1 minute here. All right. So in about 30 minutes time, you're going to be entering into a run on liquidity. It looks like you're getting some bearish divergence here. You had a previous order block that was trying to express itself off the super trend, getting taken for a ride on the 1 minute here, getting some bearish divergence on 2 money flow oscillators averaged out through time, and starting to see this come down further. If we come to the fib retracement idea here, we got a previous rejection off of the range that we had seen here. Boom, this impulse range here had a fib pocket that we're tapping into here. And if we are coming down to here, then if we're meant to continue, let's go ahead and throw this to the 30-second. Switch our gears into the split screen here. And this is how you scalp or look into ideas for scalping the NASDAQ. Here on the 30-second, you had some bullish divergence on the money flow, which is starting to express itself. The money is, wait, what happened to the lines here? There we go. So you started to see stacked money stacked on the table, and it's starting to go up by a good 12 points or so, which is decent. Starting to get some bearish divergence on the money flow up here, rejection of the cloud, and all the formulas still remain true. You just have a souped up oscillator for the sub 1 minute tuned for you, telling you here you had bearish divergence on 2 oscillators, including the money flow multiple times, and boom, rejection off the pocket here. So if we were scalping the NASDAQ right now, these are the things we would be looking at. On our oscillators, also a part of Momentum Mastered, brand new, yet to be officially talked about. But the members of the Discord get access if they want. And we're starting to see this rejection off the 30-second cloud. And there's no need to project on higher time frames for NASDAQ. It's just simply too volatile. You'll get wrecked in these small moves in the meantime. So you got to be in and out, like a surgeon. That's why they call it a scalp. You're scalping, you're cutting, you're precise with your cuts, or you get cut yourself. So the long, broad strokes of the brush saying, we called it, we nailed it. It's like, no, you didn't, because the NASDAQ is so volatile on the higher time frames. You have to be precise on the smaller time frames. So you got to be ultra clear with your entry. Ultra clear. ultra clear. Nobody wants that drawdown hell. Alright, so yeah, that's how we look at it. And so it's saying you had this potential upside play here off the super trend on the 1 minute, and then you started to get it for that 12 points, and then you set your stop into profit. The money's kind of flying away here, nobody's stacking it as of that 30-second there. So those two, that 1 minute would have been your play. Still getting bullish divergence though, hidden bullish, that could play out for further gains. So you got that 30-second bullish transferred over to the 1 minute. We're not extremely oversold just yet. I'd like to see it down in that region. Not seeing the volume step up to the plate just yet. And yeah, that's how we do it. I don't want to, we'll figure out a way to incorporate this into the streaming idea of looking at the NASDAQ as well. So as you enter into the 3 o'clock time, you'll see some sort of run on liquidity. Most likely, in this case, we've been ranging for the most part. We had a run on liquidity in this last special hour down to the downside here and got a bounce out of there. We've been essentially going sideways, so positioning has not been clear in a one directional way. Just range bound for the most part. So you have this do not enter long kind of warning, and this bullish divergence is it's not a clear run just yet. This was a clear run to the upside, so we need a clear run to the downside with some bullish divergence here. If you get a lower low and this gets bought back up into momentum here, then you have a genuine possibility of it going higher, but we haven't reached a fib level on this impulse. Let's just go locally from this point here. So we had a 6-6 reaction, and then we're trying to come back into this maybe. And this is what we're doing when we're scalping the NASDAQ. This is kind of what we're looking at, the 30-second and the 1 minute. And you're seeing the structures and drawing the fibs and looking for areas of interest to overlap with the oscillators and the liquidity. So they just negated that. And deep retrace. You're getting money flow divergence here, bearish in nature. Have yet to cross the money flying away, saying do not enter, warning, momentum not on your side. So it negated this, triggered a stop loss hunt. You didn't see any volume enter here. Money's flying away now. Money flying away, money flying away. Since it went deep, I'm going to go all the way to the bottom here, make this into the equilibrium zone. And yeah, that's it. I don't know if this is interesting to watch, so I'm just testing it out for a single mode here. And this is what you need for the run on liquidity. And then this is coming back down again. And so even if you had taken that for the 12 points, that's why you secure your gains. 12 points is 12 points. Money's flying away. And I'd be also looking at like where the orders are stacked here. This coming down to the 800 level, the whole number seems like a thing if it comes down to that region. Alright, I could just be looking at this too long, so I'm gonna just step out and go back to Bitcoin, wrap it up in a nutshell, and bid you adieu. Let's go back to our regularly scheduled indicator program. And BTC. Okay, so the hourly getting overbought. We're talking about getting that bounce to that region of the 29,118 liquidity pool on the 50xers. We could come back down a little bit to take out some of the 100x before going there and see where it stands up on the hourly cloud. Ultimately speaking, on the monthly time frame, you are starting to put in lower lows, so coming down to the 28.2 and 28.1 $20 billion pool on the monthly time frame could be in order as a continuation into Wednesday. As Tuesday's continuation ensues and you're seeing these wicks to the upside off the cloud, we could be getting a rejection if we come up to that region. 15-minute play looks to be inbound in terms of possibly rising up out into that 29,118 region. Momentum starting to taper on the leading MACD, but you could get that surge up for that double. There'd be a triple top at that point on the 15-minute. Looking at the 4-hour time frame, the 4-hour time frame had that cross down event for you back here on Monday, 9 p.m. yesterday, and we've been seeing that come to fruition. The baselines have yet to scoop up the price, but they're starting to on the 4-hour time frame. I'm not sold on it just yet because the separation between these lines is still great. If we're looking at the 6-hour time frame, we talked about that divergence, or disparity rather, between the money flow and the RSI, so that's still not reconciled 100%, although you are getting to the KD lines down to the 0 level almost on the 6-hour time frame. 12-hour time frame, 12-hour time frame momentum could be just getting started, so we're looking for this continuation down to that region to complete the 1382 at least. Based on it coming down and taking out this wick, you could come and take out this wick as well, just a matter of when. So I'm not necessarily sold on the bottom idea in just yet. I mean, this is a lower low, you're not double bottoming. It is an extended W possibility, but just in terms of seeing liquidity up above as opposed to below, not seeing double digits even all the way up to the 30k region just yet. So coming down at least to the 28.2 region, taking out some of the external liquidity here. Let's go see what that 28.2 looks like on a higher time frame. Would be $28 billion on the 3-month. Let's go see what it is on the 6-month. $38 billion. Nothing significant until you on the 6-month till you go down to the 27k region, but we'll take that as it comes. So once again, we talked about the daily time frame needing to close above 28,690. If not, then lower lows will be almost sure to follow. So it could go sideways into the daily close and try to close above this 28,690 and then take it to this region thereafter. And so we're not going to change this projection just yet. We're going to see how these fibs hold true until they don't. And as of this moment, the 1 level is now possibly coming into resistance as we break 29k, and we could be coming down to the 1382 on this bearish trend-based fib extension level. And that's my story, and I'm sticking to it. We're on the path to 1382 perhaps. Thank you, ladies and gents, and thank you for coming on in to the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the precision, the accuracy, all that fun stuff, and we'll catch you on the flip side.